Okay. Okay. Hello, guys. You're welcome. I see a lot of you guys are joining us from YouTube, and you're welcome to this live session. So this is NFP live event. For those who are not so sure what NFP is about, I know a lot of us traders here know what NFP is about. NFP is non-farm payrolls, right? Also known as non-farm employment change, right? So it's an employment-based data. Sorry, let me record this. Okay. Um, all right. So this is a news event that gets released every first Friday of the month, right? So it's an employment-based data that gets released every first Friday of the month, right? And it's a US employment-based data. So this is the economic calendar here, where we look at what's actually happening or what we expect to see in the market today. So today is Friday, June the 5th. So we have a couple of high impact data here. We have the average hourly earnings. We have the non-farm employment change, which we call the NFP. Then we have unemployment rate, right? And we're going to be focusing more on these three data points here, not on these two, because that affects Canada. This will only affect those who are trading card pairs. If you're trading USD, CAD, JPY, and so on, then of course you may need to pay attention to that. But for the purpose of this session, or for the purpose of this live stream, we're going to be focusing more on the data release around the employment situation in the United States, right? That's what the non-farm payroll is all about. So we'll be taking time to, look at it from the fundamental perspective, look at it from technical perspective, and then look at the instruments we would like to trade and how we would like to proceed with that, right? So now, first of all, you have the average hourly earnings. Average hourly earnings measures the increase or decrease in the average pay of the US employee, right? Increase or decrease in the average pay of the US employee, right? So when that number increases, that's a good thing. Now, generally, when these numbers are positive, that's a good thing for the dollar index, for the US dollar, right? When these numbers are negative, that's a bad thing for the US dollar. So if these numbers are positive, we should see strength. We should see buy momentum, bullish moves, right, with the dollar index. And then when these numbers are negative, we should see bearish momentum or bearish moves on the dollar index, right? Now, for many of us, we don't trade the dollar index directly. We trade it in as a pair with other instruments, which we'll look at shortly, right? And then for those instruments, we'll be looking at how we're going to trade them. So we're looking at average hourly earnings. That number was 0.2% last month. It's expected to come in at 0.3% this month. So that's a positive expectation, right? Now remember, positive expectation is not the same thing as actual result. Okay, I have positive expectation and the actual result is something different. But when we have positive expectation, at least we know what to put our minds on. That's the reason forecast is important, right? Traders like to see forecast. Then we have the non-farm payroll itself, non-farm employment change. The number for last month was 115,000. The forecast for this month is 85,000. 85,000. So it means that when it comes to non-farm payroll itself, the number itself, we're expecting lower numbers there, right? That's a negative expectation. Then unemployment rate is expected to remain flat at 4.3%, right? And so what we're looking for is something different, a change, a shift from these numbers, right? Either to the upside or the downside. We're going to look to trade, right? Those are the numbers we're looking for. Now, let's go to chart here. Now, we have a couple of instruments that we should be looking to trade. Okay, a couple of instruments we should be looking to trade. One of them is gold. Then gold has this inverse relationship with the dollar index. Okay, which means that if you're expecting the dollar index to buy, gold should sell. And if you're expecting dollar index to sell, gold should buy. So let's even go and start from the dollar index itself. Let's see what the dollar index is doing right now. So let's look at this. Now, we've seen range-bound movements with the dollar index recently. It's been quite range. So you can see how price has, of course, it still maintains bullish momentum, but it's in range bound, right? So what we've seen is that price has moved into this level here, this zone here, right? Um, Price bumped into this level here, which is around the 99 dollar level, and then pushed up and came back to this zone. Now, if the news comes out positive for the dollar, we should see price jump to the upside. Jump to the upside. Now, if price comes in negative for the dollar, we should see if the dollar collapse like this. Okay. Now, price, due to the nature of this particular news, price can actually go either way. Price can actually go to the upside or to the downside, right? So what we need to do is analyze and understand what we see happening on the chart right now and what actions we could take to that effect, right? So that's basically what we are looking for right here, right now. But we can see that the dollar index is actually at what seems to be a demand zone here, right? So price seems to be at a demand zone, sitting around a demand zone. So what's it likely to do? Is it likely to break to the downside or break to the upside, right? So that's what we're watching now. Now let's look at some other instruments like the Euro USD. The Euro USD made a huge buy, I think, early yesterday, and then sold off and bought again. Right now, the Euro USD is sitting around the 1.16400 level here, right? Now, this area here, which is the 1.165, this area here, let me show you guys, this area here is an important level. Okay? It's an important level. And overall, when we look at this instrument overall, you can see overall it is bearish. It's bearish overall. Right? Now, if it's bearish overall and you are seeing bullish momentum on the lower time frame, right? It tells you that could be a pullback. That could be a pullback. So when price makes a pullback like that, we should expect to see it sell off at some point. We should expect to see it sell off at some point. Okay? Now you can see that the market is really moving slow because the market is waiting for, money flow is waiting for price, waiting for the news. Where's the market? Where's the news going to go? Is it going to go to the upside, to the downside? All of that is what the market is considering. So what I would expect to see now is that I'm expecting price to sell from here and go all the way down. In which case, we're expecting positive numbers from the dollar index. We're expecting positive numbers, which means that we should expect to see something like this. So if positive numbers come in, then we see the dollar index rally like this. Okay, that would be a very sweet move to make. Okay, and in that case, we would see the Euro USD also sell like this because the dollar index and the Euro USD have opposite relationships. Okay, so how we are going to trade this when we're trading the actual news is that we're going to attempt to capture a trade irrespective of where the market goes. All right. That's basically how you trade this news. You cannot, because we don't know exactly where price is likely to go. So since we don't know where price is likely to go, we're looking for a chance to be able to capture the upside or the downside. Right? Now, what we're going to do is that we're going to look at different instruments too that we could use, but we're looking at Euro USD to start with. Now, where price currently is right now, Um, like we said, we're expecting price to sell from here, right? Now, as much as we expect price to sell from this level of 1.14, 1.16441, there's still a potential that price will get into this zone here before selling. Okay? And this is just natural because we can see that when we look to the left-hand side, we see that this is a supply zone right here. It's a supply zone. And then when you use the Fibonacci retracement here, it's telling us that that is a significant level. That's a 61.8 retracement level, which means that price is likely to hit that level and then sell. That is the potential. That is the possibility. Okay? Now, remember we said that this instrument, Euro USD, is bearish. Now, not just Euro USD, these same moves, we'll be seeing it in gold, seeing it in gold, we're seeing with GBP USD, we're seeing with gold and all that, NZD USD and so on, right? This same price action will be something that we're seeing happen with all of these instruments because they have this negative correlation with the dollar index. So which means that if the dollar buys, they sell. If the dollar sells, they buy. So if we're expecting to see buy moves from the dollar index, then we should also be expecting to see sell opportunities. We should also be expecting to see sell opportunities with all these instruments: Euro USD, GBP USD, AUD USD, NZD USD, and even gold. Right now, if you're trading any other instrument outside that, then of course we're expected to see volatility across board. All right. Indices, Nasdaq, S&P index, we'll expect to see volatility across board. Why? Because the dollar touches every instrument, every market is touched by the US dollar. Because the US dollar is involved in trade, in transactions that happen with every single instrument, every single asset out there. So this is what we're looking at now. So from what you can see, a whole lot is pointing from the technical perspective here. A whole lot is pointing towards a towards sell opportunities. But the only possibility that there might be a buy is if there is a surprise to these numbers, right? We call it a surprise. What is a surprise? A surprise is when we have a huge difference, right? A huge deviation. When we have a huge deviation from these numbers here, then we have a surprise. The market is literally shocked, and you will see the way money flow happens. You will see the way the market moves massively because the market is literally shocked. It's called it. So when we see a huge deviation from these numbers, that will be a shock. And if these numbers are hugely negative. Now, remember, last month was 115,000. Forecast for this month is 115, 85,000. Now, if these numbers come in at 50,000, if these numbers come in at 50,000, that is a much weaker number. So the dollar index is going to sell. The dollar index is going to sell. Now, if these numbers come in higher, let's say it comes in at 120,000 or so, the US dollar index is going to buy. Okay? And if it buys, that will feed into the narrative we are already monitoring right now. Okay? So, but when we look at the employment situation in the US, it is more likely that the numbers may come in positive than negative, right? It's very possible that the numbers are likely to come in positive than negative. So that's something to put in mind. So we will be expecting that. And for that reason, um, for all these reasons, we are looking at bearish opportunities with Euro USD. We are also looking at potential bearish opportunities with gold, right? We're also looking at potential bearish opportunities with gold. Okay? Now, that's basically what we're looking at here. It means that what we'll more likely be looking for are opportunities to sell Euro USD, opportunity to sell gold. We don't have the time to get into many trades. So this is quick trading, right? This is trades that happen very quick succession. So since this happens in quick succession, we cannot really trade so many things. As much as we can see a lot of moves happening in the market, we can't trade so many things, right? But we can trade only a few, right? This is when we have 30 minutes to go. What we're going to do is that we're going to attempt to capture sell opportunities, either in gold or in Euro USD. Okay. And then we're going to ignore the upside. We're going to ignore the fact that price can go higher. And we already said why, right? We already said that. And we already said that there is a low chance from what we can see from technical and fundamental perspective, there is a low chance that the numbers from the NFP will come in much, much lower. There's a low chance, right? So there's a low chance it will be much, much lower. If it comes in, if it doesn't come in much lower and it comes in higher, then we're already looking for buy opportunities here. So, and plus that, this narrative we are building right now fits into the overall trend that we're already seeing in the market. And there is something about how technical analysis and fundamental analysis tend to work together. That's why many times when you go on a higher time frame, like on a weekly chart or so, daily chart, weekly chart, monthly chart, you will not see, you might remember a fundamental event that was very high impact, right? Maybe NFP or CPI or any of these data points that was very impactful or that impacted the market very heavily. But when you go on a higher time frame and try to look for that particular data where it played out, most of the time you don't see anything, right? You don't see it. And the reason is technical analysis and fundamental analysis tends to blend into technical when you look at it from a higher time frame. So what I'm saying in all this is that when you look at the charts, right? When you look at the chart and you see when you look at the chart and you see a particular trend from the technical perspective, it could make sense for you to start looking for the same kind of narrative, the same kind of market direction from the fundamental side of things, right? So since we're already looking at bullish moves from the dollar index and we're looking at bearish moves in Euro USD and in gold, we might as well stick with that narrative and just decide, okay, we're going to trade looking at Euro USD here. We're going to trade and then we're going to try to capture this move to the downside right here, right? So that's what we're going to do. We're going to look for sell opportunities on Euro USD. Another instrument that is quite good here is gold. But gold has this correlation with the dollar index, and but Euro USD has a stronger correlation with the dollar index, right? And gold is very, very volatile. So we're going to be picking an instrument that is not too volatile, which is Euro USD. Of course, we want volatility, but not the one that can easily go against you very badly. Because like we said, this trading, there's a whole lot of uncertainty around it because we don't know what the data is. And that's the thing. The data is deliberately kept top secret because the authorities do not want it to be out before the news comes out. So that is what puts a whole lot of uncertainty around this data, right? So what we're going to be doing, we have 25 minutes to go. What we're going to be doing is that we're going to be setting some trades. We're going to be setting some trades. We're going to be using what we call pending order trades. Pending order trades. So we're going to be looking at trading Euro USD. We're going to be using pending order trades. Lives. Yeah, so what we're going to be we're going to be using pending order trades, right? Pending order trades, and particularly the pending order trades here, we're going to be using uh, buy stop buy stops and sell stops, buy stops and sell stops. So what I said before was that since the news, we don't know particularly specifically where the news is going, but from the technical perspective, we can see that price is bearish on Euro USD because we have bullish moves on Euro US on dollar index. We're expecting to see bearish moves on Euro USD. So we're going to position ourselves to capture a move to the downside, a sharp move to the downside on Euro USD. Okay. So we're going to position ourselves to capture a sharp move to the downside on Euro USD, and we're going to attempt to use sell stop to do that. Now, normally, if this wasn't clear at all and we're somewhere where the market had been ranging totally, which means we do not see a clear trend. Okay, but here we see a clear trend. A clear trend is bearish. Now, if we don't see a clear trend, then we will use a buy stop and a sell stop. Okay, so that if the market goes up, we can still get on the trade. The market comes down, we can still get on the trade. But with all the supply zones around here, I personally would, except there is a huge surprise to the market, all these supply zones around here will definitely will hold price because there are going to be a lot of pending orders waiting there to push price down. So if you are looking to make buy trades and you're like, okay, I'm expecting to see buy, if price bumps into this area here, we might see price drop off. And then you might see price trigger your entry and then sell off and you're not in, you are in loss, in losing position. So that's why we're concentrating only on sell opportunities. Yep. So this is something I'm going to giving us exact trades to take here, entries, entries, stop loss, take profit, numbers. We're going to be setting that up shortly. We'll activate that trade in 5 minutes. We'll activate that trade 5 minutes to the time. We'll activate that trade what? 5 minutes to the time. So we'll activate it at 125. If you're in South Africa, that's 225. I think if you're in Kenya, that's 325. So that's what we're going to do. And the reason is price is still moving. And as price is moving and time is going towards the 130 time, this was what 130 West African time. As time is going towards the NFP time, market is going to keep fluctuating in anticipation of what the market is going to do. In anticipation of what the market is going to do, right? So that's the reason we will not set a trade right now. We will rather wait for like 5 minutes to the time, let the market move, and then give us levels where we need to set our pending orders. So we have about 15 minutes to go, and we'll do this in 10 minutes. Within the next 10 minutes, we would have seen the levels in the market, and then we'll be able to set our pending orders there for a trade we're going to do. So, like I said, guys, this type of trading is quite high risk, okay? Which means that it's going to be necessary for you to manage your risk properly. Manage your risk properly, right? Remember, these are trade ideas, and it's not uh, there is the potential for you to make a loss. It's a potential for you to make a loss. So always have that in mind and use proper risk management. Use proper risk management because when we look at the market, we're telling you what we're seeing in the market, but there is no guarantee that that's exactly what's going to play out, right? So for that reason, it's important that you use proper risk management. That's why I said I'm going to be giving us entry prices. I'm going to be giving us stop loss prices. I'm going to be going to take profit. Right? So, and it's important that you set all of that. If you have $100, you have $1,000, whatever amount you have, you should be able to pick the lot size that's commensurate with your account. I will talk more about that after I've set the trade. Once I've set the trade, I've seen the levels where we should enter the trade, and I set the trade, I'll talk more about what your lot sizes should look like. So we have about 9 minutes, then we'll be planning to set this up. Set it up. So what am I seeing here? I'm seeing two levels here. I'm seeing a demand zone. Okay? Seeing a supply zone, sorry. I'm seeing a supply zone here, and I'm seeing a demand zone here. I'm on the 15-minute chart, right? So I'm seeing a supply zone and a demand zone. Okay? So the way we're going to play this is that we're going to put our orders. Since we're looking to mostly sell, we're looking for sell opportunities. We're going to put our orders under this level here, right? So we're going to be doing something like this as entry level somewhere around here. Okay? So we should be having our entry level around here, which is uh, sell stop order. I'm going to set this up shortly. Then our take profit levels will be somewhere around here. Let's see what it would turn out to be. 20. So that's where our take profit will be. Then our stop loss would be somewhere around here. Okay. So what we're doing now is that we're looking to enter the market around here. Then we will have our stop loss above here. And then we'll have, okay, no, this is quite far away. It's quite far away. Um, okay. Take profit will be here, stop loss here, our entry is here. So we're going to be taking just one trade, and that trade is going to be a sell stop order. A sell stop order. And so let me set the trade. I will tell us when to take it. So now, let me just go ahead and set it up. Somebody is marking the screen, please. Please, refrain from doing that. You're disrupting the screen. Please stop doing that. Thank you. Okay. So this is the trade we're going to be taking here, right? So this is the trade we're going to be setting, but we won't be entering the trade at this time. We're going to be entering in about 8 minutes. We enter at 125, thereabout. Okay. Now, I will also know if there's going to be an adjustment to make here before we enter the trade finally. So for now, these are the parameters. If nothing changes as it is right now, then we'll use these parameters at 125. But if anything changes, we might have to adjust those parameters. I pick these parameters based on what the market is looking like right now. Okay, so let's just hold on for another 8 minutes. Then we will know exactly, able to give us exactly what prices to take. Okay. Mhm. All right, so we'll be setting up this trade in 5 minutes. 5 minutes. So let's get set. Once we set this trade up, that's all we need to do. We don't need to do anything else. We'll just wait for price to play out, pretty much, right? So like I said, it's important to use proper risk management. This kind of trading is high risk trading, right? Because the data that's coming out is not based on technical analysis. You can look at technical analysis and you can say, oh, I can see that price is at this level here. This is what price is likely to do. There's going to be a liquidity sweep around here, and then price sells, or there's a liquidity sweep around the bottom, price will buy. I don't expect a significant difference. But then when it's fundamental, that's driving the move you're expecting, it's quite unpredictable. Right? So since it's unpredictable, you want to make sure that you take the chance, you take the risk that your account can carry. That's very important. It's important you take the risk that your account can carry. So if you're using $1,000 to trade here, decide how much of that 1,000 you're risking. Are you trying to risk $100? That means your lot size must reflect $100. If you have $200 in your account, how much are you risking? You want to risk 20%, 30%, you know, 10%. How much of that money are you risking? Once you risk that amount, that's a reflection of what is going to, when that trade plays out in your favor, and that's a reflection of what you get. But also, if it plays out against you, so it's always important as traders to think, what can go wrong? If this trade doesn't go my way, what is it that can happen? What will happen? So you don't want that to be a surprise to you. You want to calculate your risk. You want to know for a fact what your risk is on a trade, how much you stand to lose if a trade doesn't go your way. You have to do that as a trader. All right? Very important. You can see how I'm emphasizing this because it's important. So now we are 123. So we're going to set this up in 2 minutes. We'll set this up in 2 minutes. Okay. At 125, what we're going to do is you're going to go to your chart, right, on your phone. You pick on Euro USD. You click Euro USD. In fact, I think we should do that now. Set that up now. Go to your chart, go to Euro USD, click on new order or trade, depending on the kind of phone you use. On Android, you see new order. On your iPhone, you see trade, right? Click on that, and then select your lot size, and then click on market execution. Change that to sell stop, sell stop. Change that to sell stop, right? Sell stop. And once you've done that, you'll see price pop up. Now you are going to use this price that I have on the screen. Entry price 1.16, 1.16320. That's the price you're going to put there. 1.16320. That's the sell price. That's the price for the trade. Then stop loss. Look at stop loss there. 1.16470. 1.16470. Then take profit is 1.16120. Okay. So this is what you are going to do now. You're going to you're going to place that trade and just hold on for the next 4 to 5 minutes. Right? So set it up like I said, use the lot size as commensurate with your account. As a trader, think risk first. Think risk first. Make sure you're using a lot size that's commensurate to your account. You can see how the market is very slow, waiting for that news to hit the wires. Waiting for that news to hit the wire. We're 126 right now. We have less than 4 minutes before the news comes out. Less than 4 minutes. Okay? So set your trade, use proper risk management, wait for it. Okay? 3 minutes. 2 minutes plus. We have 1 minute to go. 1 minute plus to go. We have 1 minute to go. Make sure your trade is set and waiting. We have 30 seconds to go. We have 10 seconds to go. All right, non-farm payroll. Okay, it's activated. We're in profit right now. 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 Okay, the trade is going in our favor. It's still running. You can see how volatile the news is. News is actually volatile. We're still in profit. Let's see what the data is that came out. Okay. The numbers came in really high, so it was positive for the dollar. Can you see this now? It was really positive for the dollar. So that's why we're seeing the dollar is buying right now, and we're seeing it show up in the trades that we took. Okay. We're still in profit. We're out. Woo. Yeah, we're taking profits. We have taken profits. So who has made money? Who has made money? Who has made money? Who has made money? If you have made money, put a one in the chat. If you have made money, put a one in the chat. Let's know who have made money. If you have made money, put a one in the chat. Let's post on yeah, just put a one in the chat. Let's see who has made money. Our traders hit take profit, so that was pretty good. And that was fast too. Yeah, about all the people are here. I'm not seeing it. I'm not seeing chats. Are you guys not making money? Do you guys not make money? I hope you guys didn't come to just look and watch and see what happened. Okay, good. Someone is texting. Let me see what someone is saying. Okay, let me see. Make sure that we can all chat. Yes, who else made money? Who else made money? I hope you guys didn't leave money on the table just watching. Who else made money? If you're on YouTube, guys, if you made money, put a one in the chat as well. Say I made money. Okay, good, good, good. So I'm seeing somebody Oluwaseyi made money. Nice, nice, nice. That's good. Who else made money? Who else made money here? That was a sweet one, and it was an easy one. Okay. Okay, someone else is dropping their chat there. Okay. Amy Wise Forest made money. Amazing, 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 amazing. That's a nice one there. Nice ones. Okay. Yes, so please, if you're on Telegram, please, the chat on Telegram, which chat? Which chat? Should they drop their screenshot on the chat? Which one? The group chat, right? Okay. So please take a screenshot and drop it on the chat. Take a screenshot, drop it on the chat. There's a group chat there on our chat here. You see general chat room. General chat room. So put a comment on the general chat room there. Okay. Put a comment on the general chat room. Okay. So you see price is still dumping, price still dumping, price still dumping, right? So you can see price is still dumping right here. And that's because the dollar is literally strong right now. Can you see? Phew. You see that hefty movement there? Hefty move. Nice. Whoa, someone said I made 130K. That's good. That's good. That's good. That's good. That's good. That's someone's salary that you just made. That's someone's salary. Yes, there's a Telegram chat. I don't know who. Um, can you drop the Telegram chat? Yes. So someone is going to drop the no, no, no. Someone is asking if the trade is still on. No, you didn't join us early then. The trade is a fast one. It's a fast one. So since it's a fast one, it's happened very fast, right? Literally within 3 minutes or so. Put it on the yes. Yes, so we're going to drop the link to the Telegram group right now. You're going to click to join and then just post a screenshot. Okay. Okay, there's the screenshot, right? Can you take the screenshot from there? Yes, please drop the link. Okay. Yes, that's the link now. The link has been dropped here. That means just drop the link. So click on the link and join the Telegram group. Then you see the chat. There are different chats there. There's the group chat, the general chat, right? Just post the general chat room, right? Post the screenshot into the general chat room. Okay. So that's a Telegram group there. So click on that to join the Telegram group. And then you can post your screenshot right now into that group. Okay. Okay, guys. So we're going to be doing this from next week. We're going to be doing this live on a daily basis, right? So we want to be able to help you guys make a lot of money the next couple of months, right? We're half year, halfway through the year already. So we want to be able to help you guys make good money, for the rest of the year, right? So please, we're going to giving you further details. Make sure you're joining all the sessions. Make sure you don't miss any of the sessions, guys. Make sure you don't miss any of the sessions. All right. Thank you very much. Please make sure that you go to that chat, click on the chat, join the chat. And also on that chat, there's a whole lot that you benefit from there. So we're not just asking you to post your screenshot alone. There's a whole lot. There's a whole lot of resources, trainings that we do on that chat group there that you're going to take advantage of that will benefit you a whole lot. Right. So join the group there, join that Telegram channel. There's a whole lot that we have in store for you there. We give you trade signals on a daily basis. Okay. You too. That shift. Okay. Um, I'm yet to be accepted. Yes, you'll be accepted. You'll be accepted. You'll be accepted, but I think you can still post, but you'll be accepted shortly. You'll be added to the group. Okay, like I was saying, that Telegram group, make sure you join it. There's a whole lot that we do there on a weekly basis. We give you trade signals, trainees, everything you need to be successful as a trader. We give it to you. That's what we do at Advantage Markets. We'll make sure that we give you everything you require to become a very successful trader, right? So make sure that you are on that group. Don't leave that group for any reason because it's going to that group will be instrumental to how profitable and how much money you make for the rest of the year. So you don't want to be told. All right? You don't want to be told. You want to be part of it. Okay? Thank you guys, and I will see you guys on the next call.